We agreed. Anyway, very nice. And Miad, welcome back to F.A.C.E.
Good morning, everybody.
How are you, buddy?
I'm great.
Big move in yields. There is gravity in yields. We're seeing it today. Are you going to share your screen?
Well, indeed, yes. Thanks for having me. Hi, Blake.
Great to have you back.
Hi, Ryan.
Hi, Miad. How you doing? All right?
I'm good. I'm all right.
Welcome.
Thank you. Well,
it's that little green box, Miad. Oh, there you go.
Yeah.
Okay.
You can see my screen?
Yeah, got it.
Dynamite. Big move in the deals. I think everybody, including myself, was thinking, look, if this read is not going to disappoint, when is this inflation going to stop? So good, we've got to see a bit of a disappointment in CPI, at least if not for our own pockets. We see a bit of dollar reversal here. That's exactly what you like to see. You want to see a little bit of the hawkishness coming off. We had US 10-year yield coming down a little bit. Ahead of it, we had supply concession, which is usually a dynamic you tend to see ahead of the 10-year auction, where marketers tend to drive up the yield, so you get better prices for the bonds once they start getting the bidding war on.
Okay.
So I don't really take the yield move today too much into consideration. We like to see how it evolves throughout the week, specifically given it's a shorter week, but certainly looking like very, very toppy already.
I went to your Twitter stream, and your long-term idea, I call it maybe your highest conviction trade, was long odds again, and that's been a terrific ride. Wondering if with what's going on here, if you think that any dip in Aussie yen should be bought still, and your take on the yen. I know it's a big pair to you because last time you were on, you're a little bearish U.S. dollar yen. You said instead of playing the short side of equities, the way to go was shorting yen crosses. I think it was back in January or February, Miad. So yeah. Where are you on the yen now? I saw you're working the long side. What a monster move it's been. Could we be close to completing something there, short term at least?
Very interesting brought up. So yeah, last time I saw it sort of topping out. Bad decision to short yen, obviously, very bad. This is specifically what happened with oil started ripping. Had to revise some of the trades, and in the middle of it, ended up losing a lot of the upside that I wanted to catch up, which was one of the downsides for me in February. Probably didn't end up as much profit as I like to. Going ahead with yen, what you have is a Bank of Japan doing yield curve control. And when they start doing yield curve control, some really interesting dynamic happens. Specifically, when I first time did it in September 2016, we saw some really interesting moves in yen. Basically, all yen pairs started rallying, specifically USD JPY, massive rally. I'm going to quickly pull up that chart, actually, since we're talking about it. It's good to bring up the visuals as well.
Yeah, and you know what, Miad? Everyone is wrong. It's okay to be wrong. It's not okay to stay wrong. And, even sometimes I have to be the wrong way in the market just to know, like, I'm fading the trend. I'm making the tough money. And then the easy money's coming on the other side of the market. Sometimes you have to be the wrong way to know to get the right way.
Yeah, but you certainly can't be neutral on a moving train, not something like that. So you really wanted to make a directional call on this. There wasn't one of those markets where I had to sit it out. It was one of those where I had to get engaged. If you're wrong, you flip it. And that tended to be one of those. Going back to 2016, September, that's when I started the yield curve control actively. We saw an initial dip, but then after the Trump election, that rip came. And funny enough, in the recession in 2020, market dipped back to when I started the yield curve control and quickly climbed out of it, better part of 1,000 pips or so. So right now we're in an environment where they're doing this yield curve control again. They are controlling the 10-year yield on the Japanese yen for 25 basis points, and they're quite effective at that. Basically, every time market starts pushing there, the Bank of Japan will buy unlimited amounts of bonds, flushing the market and the treasury with money to keep the yields from rising. If yields rise, the credit's going to be much more expensive. Government has to borrow much more expensive, and that will ripple down the economy, and that could possibly choke off economic growth in Japan. So that's
what about the flip side? What about the flip side? Okay, so the yield curve control is accomplishing their monetary goals, but not much is grown in Japan or drilled in Japan.
Mm-hmm.
And they're an importing nation. So a weak currency, I would think, would only exacerbate what the population is paying for everything. Is that happening? And, I saw the DSI on the yen, I think at 8 today. So what about the flip side of having a weak currency and having to buy everything from outside your shores?
Yeah, so when I look at what Bank of Japan does, I don't look at it necessarily what it does for the Japanese economy, because it doesn't do quite a lot. Same thing when the Fed does QE or when the ECB does QE. It doesn't really help the normal people. It really helps the investment environment. There's some that's very common, but you don't really see in the headlines, that QE leaks. So the QE from the Bank of Japan is leaking over to the US stocks. It's leaking over to the DAX, is leaking over to peripherals in European bond markets. So as long as Bank of Japan keeps chopping along that, flooding the market, you're going to see these leakages in these different markets. Once they stop that, that's when you see actually yen accelerate aggressively, because all that money will get pulled out of those markets, or it will stop flowing. So I think the bigger impact here is global rather than for Japanese. For Japanese people who live in Japan, if that makes sense.
They must not have elections very close then.
Yeah.
Okay, then it'll become economic too. So, I can here in the States and everywhere, it's the biggest issue. It's become political. Inflation. We have to defeat inflation like the 70s when you were just a little guy.
I was a twinkle in Dad's eye. No, since I
see how little you were.
I had to go that way.
You needed a microscope to see it. So that's great, Mia. So okay, anything you're thinking about ECB wise?
Yes, I am bullish ahead of ECB. I'm bullish mostly Euro GBP. I've added a small position Euro USD long just after I saw that CPI just now.
Yeah,
I am looking for ECB to start committing to a rate hike, do something here. Last time I seen a rate hike was when there was another French at the head. That was back then Trichet, who was the only guy I ever seen raise the ECB. And after we had Draghi, and he had different types of policies. So what I really like to see, I like ECB to show a little bit of, step things up. We're seeing all how the economy is evolving. That's the sort of interest rate they're running does not reflect that. So I'm looking for them to start raising rates, start committing to some sort of a path. And I'd like to see a little bit more oomph on Euro USD. When I look at the yield spread charts on Euro USD, it's not as attractive. So when I look at the yield spread charts, that's telling me maybe there's a little bit more downside left in Euro USD. And that's why I'm keeping my position in light at the moment, because I feel like the yield spread chart tends to be a leading indicator for me for where FX is moving. So when I look at that, I see a bit of a bounce. But the original dip was quite aggressive. So maybe we can catch a little bit more downside on Euro USD. For me, I'm happy to go in with a long and keeping my stops quite tight now, running just around these lows here. If it breaks away, it's absolutely fine. Then we'll re-engage with it. And I need to rethink that. On another trade I'm running right now is Euro GBP long, because I think that the elections are over, French elections are over, similar to 2017. I'm expecting some sort of an upside. But my initial target being around the 0.84 level. Again, yield spreads aggressively in favor of this moving higher. It's just about getting the timing right with this trade. Another trade I'm running.
Okay.
Yeah.
Go ahead, buddy. Go ahead.
Right. I'm just going to wrap up a couple of trades and then we can go into the details. I've got a DAX short running. As soon as I heard about the news that Germany is thinking about possibly cutting energy supplies and gas and all of that from Russia. Had a good initial 400 up hit drive, so I had to take some money. I was hoping I'm going to get lower levels. I'm starting to tighten my stop on that trade because there's some notorious going on about April, where the first couple of weeks you see these incredibly lovely moves. Everything makes sense. Halfway through April, everything falls apart. Either goes into a chop or all the moves start getting reversed and they find their footing again back in May. That's a pattern I tend to see over the years. And when I went over my own trading, I realized that happened quite a lot.
April
so I'm a bit cautious as we're moving deeper into April.
April's a strong seasonal month. Is that what you're saying?
Yeah, it starts off really strong, Dale. and then you just get rocked. If you're not quick enough, you will get hurt. So that's
okay.
So I'm mindful of that. Don't want to overcommit to a trade right now when I'm close to the middle of April. The last trade I'm on, which I actually just got stopped out, was EURUSD CAD. So we went long at 24.87, and I just got stopped at 26.09 as dollar starts dumping away on the back of that CPI trade. A lot of interesting things running, AUJPY as well. We're still sitting with this one on the long side. A lot of interesting things happening right now in terms of, is this inflation peaking? Where are we headed here? So I think we need some chewing through data still, but there's certainly a lot of good trades kicking about. I think you had a question or so, and I'd like to get to that.
Okay. I'm wondering, where do you come down on that? We've had oil come down, big, huge, I don't know, looks like a distribution pattern to me, between the mid 90s and 130, bouncing off support here. Copper looks like it's rolling over to me. The miners had a great run, but they're all diverging now. Wondering if that scenario could be something that will become the new narrative from, sell all bonds and just be long commodities and commodity currencies. And we're in a super cycle bull market in commodities, and I haven't seen people this bullish, and for good reason, commodities, but maybe it's a little too crowded and we need a breather in both. The bearishness out of the interest rate scenario that we've had, and take some of the bullishness out of the commodity markets. What do you think?
With that in mind, exactly what you just said, with that in mind, I've approached AUDJPY, funny enough, last week, and I thought, look, AUDJPY, perfect reflection of inflation expectation, perfect reflection of this whole bull run.
Yeah,
I think you should stop. So I started shorting it, and I'm seeing this is not moving lower. And you take time into consideration, you take yields into consideration, and you think maybe I'm wrong here. So I had to get out of that trade pretty quickly, flip it long again, as F.A.C.E seems to be either leading or lagging this whole commodity thing, because I don't see it has peaked yet. Yeah, I see copper coming back down, you're right. Oil definitely reared back. But we see that there's some other issues still happening there down the line with other commodity producing countries that are not quite resolved yet. We just recently saw Sri Lanka defaulted on their debt, and that's all on the back of food price inflation. So all of these smaller nations, they are, if they start having this chain reaction of defaults because the inflation is hurting them too much, it's going to start nipping away at us as well. So I'll be very cautious to call this commodity whole thing a top just yet. I think like if I had to call it a top, it was really great when when oil was trading 125 on WTI. Yeah. I think that was a great level to start looking for shorts, because we saw a lot of money come off of that. But now I am not too sure, because basically this whole rally was on the back of the Ukraine-Russian crisis. We reabsorbed that, and now we are trying to find the equilibrium. Where can we trade from here? From what I see from data coming out, it's difficult to examine this lower. Sorry, fire away.
Yeah, that's all right. So it's interesting news. I didn't know about that Indonesian default, but that comes in light of some type of technical default by Russia on part of their debt because they wanted to pay in rubles. Will the complete default by Russia ripple through the markets, or is it just something that we're whistling past the graveyard, not being that concerned about it, since it was our policy in the U.S. And the World Bank and the IMF is the U.S. So our policies are driving Russia into a potential default. Will it have any impact on, say, Europe has more exposure to Russia, the banking system? No one's talking about it. I know you're a pro, you look at everything. Are you thinking about that at all?
There's some idiosyncratic risk to do with Russia. The good thing that they still have some sort of a buffer of cash lying about, and they're also still selling oil at a steep discount, but they're still getting cash into the country. One of the biggest pricing powers, or one of the biggest things that they needed that the UK took away from them, was basically being able to sell their government bonds in the open market. So that was basically free credit for them. in this newer society of monetary policy, as long as you can sell your bonds, you got continuous cash flow. That was one of the biggest thing that is probably going to hurt Russia down the line. In one way, you could say, good that the UK did it quite early, because if they waited a bit longer, market would have driven the yield to the absolute limit, and that would have hurt Russia more. But the problem Russia has got, they can't get funding from normal markets, and that is really painful. They can't transact with other countries. That's really painful. They have one or two investment firms. They have money stuck in the billions. They have a couple of companies, oil companies, they have to write off, again, in the billions. Yeah, it will certainly hurt the economy down the line. But you haven't seen Russia crack yet. This is not a Russia that's cracking. This is a Russia saying, look, we're not defaulting on our debt. We're just playing a bit about with a couple of things. But as you can, as the time goes by, they will grind them down.
How do you explain the U-turn in the ruble? It's recaptured all of its pre-invasion losses.
Because nobody's trading. Can you trade ruble right now on your desk? I can't. They give me some ridiculous quotes. I've got two brokers. The other broker doesn't allow me to trade it. The reason it will rebound is because you can't buy it or sell it.
That's what they're posting. They're just posting a trade. So
they're making it up.
That's what Ryan told me. So I just want to, Ryan told me that, if Ryan, I thought I'd ask another smart guy, because it just, is crazy. I even asked Adam Button. He said he couldn't explain it either. So it's all just whatever trade, whatever they're saying it's worth is what's showing up on the charts.
Unfortunately, right? It's not really reflecting fundamentals right now. Initial rebound you see after these aggressive moves, but we're looking at it right now. These sanctions aren't coming off; they're doubling up, and it's going to be a long-term grind on the economy. That's what they're trying to do now. It's an economic war. We're not fighting with guns with them right now. We're going to fight with them, capitalism, and that's it's going to wear them out eventually. Not to a point where they're going to change policy. That never happens with a communistic society or country. They're not going to say, okay, please take sanctions away. We're gonna coerce to what you want us. That's very unlikely to happen. What they will continue doing what they're doing, but it's just going to be much more difficult, much more costly, and eventually their technology imports going to become less and less, and it's just going to grind the country to a much slower advancement than it is now. That's what it's going to do.
Okay, and I'd like to ask you, just say, for example, I know this is your Euro position is, I'm guessing, is mainly, just a trade, like, just another trade. Can you make a fundamental case for this rally in the dollar to be completing and for there to be a big correction or a bear market in the dollar? What would the fundies be to drive something like that, Miad?
For me, one of the key drivers now for dollar going up, news headline will let you believe it's market pricing in Fed rate hikes, which to some extent it's right. But really realistic, what happens is when Fed starts raising rates and starting doing QE, you're going to see liquidity tightening in the market. And what do we all need to transact? We need dollars. What do you need to buy oil? You need dollars. All the other commodities, you need dollars. For everything you do in life, you need dollars. So if that liquidity tightens, getting your hands on dollars is going to get more expensive, and the need for dollars is going to be more. And that really what drove up dollar over better part of this year, and so on and so forth. So the only thing that can stop that is when the Fed starts opening up the liquidity tap again. We need the Fed to either stop the QT very quickly. So they will be starting, I believe, in May. And once that happens, I'll be very interested to see if really the dollar stays up here. I really expect it to move higher. It makes sense only. But
you have upside targets
once the Fed steps back, excuse me?
You have upside targets in the dollar?
Not just yet. I really want to see how May evolves. I've learned the hard way. Don't make any predictions in April because they never work out. They're going to wait for May to come online, and I see what market reaction is to QT. In the past, I've seen QT or any type of tightening in USD liquidity, always USD positive, always, like hands down. So I'm really finding it hard to expect anything different this time.
Okay.
So the only thing that's going to change dollar's direction around is if you see
the Fed reverse again.
Yeah, you want some liquidity back in the market, and that's when you see your Bitcoin moving up as well.
Okay. So great to catch up with you. How can people follow you, or if you have one more idea you want to share with us, you know, I have your Twitter handle. You could follow me on Twitter at ZFX Trading, and he trades from Scotland. Are you guys going to join NATO, or you're safer without NATO?
I think that question's answered itself since February.
Oh, did you guys join NATO?
No, we haven't. Well, Scotland is part of the UK, and UK is part of the NATO, so we're sort of part of it now.
Yeah,
I think if Scotland goes for independence campaign again, and for whatever reason we vote to leave, I think there will be a security. There would be a security trial. Let's say how this all works out. Maybe the next day the referendum goes for yes. Before you know, he stops outside Scotland, waiting to get overtaken. But I think everybody learned the hard way that becoming independent is not just straightforward. It's not about just dealing with pounds. It's also dealing with your security outside. It's also dealing with our biggest trading partner down south, being England. There's loads to consider here to become independent. And for the time being, the only thing that's positive becoming independent is having high oil prices, which never stick. So it's a bit of an if right now.
Well, do you think you have a guardian angel that took you out of the Middle East and landed you in one of the most beautiful, safest places on the globe in Scotland?
Maybe it has, maybe it hasn't. Yeah, but mind you, I was in Germany, moved down to Iran, and then I met my wife. She's Scottish. That's why I moved up here. And to be honest, I wish I could invite you over. And if you can come, this scenery is just takes your breath away. You know, it's something different.
I've seen pictures, and you know, I really appreciate your looks and you coming here today, Miad, to share your work. So this is where you could find Miad right here.
That's the website if you'd like to be in touch, if you'd like to engage on a macro level with me, or like to see what I trade. Really happy and love to engage with other traders. Dale, again, thanks for having me. Ryan, great to catch up. And thanks everybody from ForexAnalytix.
Thank you, my trading warrior brother. Good hunting this spring.
Likewise. Thank you.
I'm rooting for you because I'd love to see a dollar break here. Thank you, Miad.
Cheers. Bye, everybody. Bye.
Adios. Miad Kasravi, everyone. And the team is going to be on the morning edge in 20 minutes to update you on this recent move after the CPI, see what levels maybe Blake is changing on the bias chart, and be part of, you know, you got to be part of this community. If you're here on F.A.C.E every day, you're getting the tip of the iceberg. My opinion is the most valuable part, and the research is great to be able to just, you know, oh, what's Grega thinking? What's Andre thinking? What's Blake doing here? You know, to have that at your fingertips, or if you're out and about, to get the notices pushed to you on your phone or wherever you're at, so you could, you know, go on with your life, and you know that if something important's happening, you're gonna get a push alert about it. I'm a big believer in the communities that have only gotten better because of the expansion. With Ryan coming in, you know, pick your poison in the number of chat rooms that are there. And this is a tough business. And, you know, you can't learn experience. It takes time, but there's so many experienced traders besides the team in there, you know, so just if it was a team, but there are people that are traders. They're not doing this as an avocation, it's their vocation. Become part of the community somewhere. I just happen to believe that Blake and the team have developed the best community covering FX for sure, and everything else. So that's the end of my lecture. Remember, most of all, don't just count your pips, count your blessings. Be back tomorrow. See who the guest is tomorrow. I had Miad. Oh, Big Cheds. Okay, so he's really a crypto trader. He's got a couple 100,000 followers. We'll see what Cheds is thinking. Tomorrow, something else Blake called. He was, if you recall, he was talking about, he was concerned about the structure of Bitcoin before it got clipped yesterday. You're welcome, Monica, Jace, Galaxy, all you guys. Good hunting. And really, try and pass the assessment. It's going to be, I don't think it's going to be a slow summer in the markets this year. So get ready. Adios, everyone. You're welcome, Jerry.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.